Alrighty, what's going on, everybody? Happy Wednesday. Happy Wednesday. How's everybody doing? Hopefully the week's been kind to you. Definitely a crap ton of fundamentals at play right now, and hopefully you guys are keeping up with what's going on. I'm going to kind of break some of the stuff down that I've been diving into and kind of supports the bias that I'm kind of taking. And then go from there. We definitely have some news coming out this week, and of course the eventual news that I'm waiting for coming out of the FOMC meeting for next week on the Fed funds rate. So yeah, let's dive into it. Give me 1 second. All right, cool. All right, I'm gonna try and get through tonight pretty quickly, just because I've got somewhere to be tonight. I've got to go pick up my daughter. She's coming back from Costa Rica, her Costa Rica trip, her senior trip. So I'm gonna be. I've got to get out of here in an hour and a half to go pick her up. So yeah, sounds good. How's everybody doing? Give me a sec here. Can you guys hear me? Oh, okay. Sounds good. Yeah, bro. Nobody was in the chat. Yeah, man. Awesome. All right, let's get started. So everybody obviously over the weekend should have heard of the Silicon Valley Bank collapse. Hopefully everybody's kind of dove into the fundamentals and why that is such a, I guess it would be the start of such a domino effect in the banking industry, right? And something I talked to a bunch of people yesterday about was, the talk around town was, okay, so Fed funds rate is going to have to take a back seat because the Fed is going to have to do everything in their power to ensure the viability and sustainability of the current banking system, right? Because if one bank fails, right, and topples over, essentially you're going to have a 2008 collapse again. And some of the largest banks in the world didn't make it out. I mean, you look back at, Washington Mutual was a huge one that ended up collapsing in 08, as well as some of the big firms, like Lehman Brothers and stuff. So the Fed is going to do everything in their power to, one, ensure that they can instill confidence in the banking system, and two, they're going to have to take a pause on the rate hikes, because part of the problem where these banks got in trouble was that they, one, didn't hedge positions, and two, the positions that they were still holding, specifically in the bond markets, were at such low points that every time the Fed increased rates, it put them deeper and deeper in the hole. So knowing that, right, you've got to kind of think, okay, so what's going to be the outcome? And then, of course, enter in our inflation numbers from this week. Hopefully you guys dove into that. Inflation numbers came out this week, specifically on the PPI side this morning during New York session. We saw, and just looking at it here, we saw that core PPI did not increase at all, right? Which is huge. It didn't. I mean, they were forecasting 0.4, almost 0.5% increase is what they were forecasting, and it didn't increase at all. Which, man, I can't understand, because I'm paying for goods and services, for food, for energy. Everything is still going higher and higher. So, all right, the numbers don't lie, apparently. And then, of course, regular PPI month over month, we saw a decrease from last month. So it went down 0.1%. So by all accounts, PPI data is supporting a rate pause or a lower than speculated interest rate hike. I think going into the weekend, there was a lot of firms that were calling for a 50 basis point increase, and that's what my speculation was. Now they're even contemplating. There's a couple of firms out there that are even are pricing in a 25 basis point reduction, which would definitely cause bearishness in the U.S. dollar. So this is all kind of leading up into what my position is going to be on the dollar. What are your thoughts on what's happening with Credit Suisse, assuming you haven't already covered? I haven't covered it already, but I mean, what more is there to talk about? I mean, they've asked the Swiss bank for a vote of confidence, and if the Swiss bank gives it, then essentially they're going to be backing them, and that's all that needs to happen, right? I mean, there's really nothing. There's nothing more to say. I mean, they're in a position where, I mean, they are a large firm that, if collapse, would be another Lehman Brothers, So, I mean, as of this afternoon, everything is, from what I've been reading and hearing, everything is on point for the confidence to be instilled back into it. So, I mean, that's going into that, that directly affects the euro, right? So the ECB tomorrow morning during New York session is going to, at the start of New York session, is going to release their rates, right? So they're pricing in everything, and this is something, again, I talked about yesterday. They're pricing in, or have been pricing in, a 50 basis point increase. They've been parading around, saying that they're going to come in with a 50 basis point hawkish. And ever since SVB collapse, and then, I'm sure you guys have seen, there's other banks, Signature Bank, there's a lot of other banking industry issues that have come from that. And all of a sudden, radio silence on the ECB side. So the question is going to be, what are they going to do tomorrow morning? Because I can tell you right now, if they come in with 50 basis point, I think you see appreciation in the euro. By default, dollar weakens, right? It has to. If they don't come in with 50 basis point, they come in 25. I think we still see a bullish dollar in a weak euro. I think that in the short term, everything's going to rely, because the dollar is going to be diametrically reactive to what the ECB is going to do tomorrow morning. So as of right now, my stance is bullish dollar, right? So, and obviously I'm going to have to wait and see going into tomorrow morning what my next move is going to be. You were listening to Bloomberg, one of the saying that SVB collapse was psychological, in terms of people panicking to take out money and putting it on social media. Do you think the collapse could have been? No, it wasn't panicking. I listen, when banks, like, when a bank run happens, it's not accidental. So this was orchestrated, and whether or not there was malice behind it, I'm sure there was. And if there was, that's where charges will be filed, if they can prove that it was orchestrated. Yeah, it's in any kind of investigation, you follow the money, right? So where did the majority of, I mean, yeah, just follow the money, right? SVB was very tech driven. Tech is funded by a lot of VCs, but they're not many, right? There's only a handful of VCs that are really puppeteering the tech industry. So if it was a matter of, trying to word it so that it doesn't get flagged, but let's just say that if the bank run wasn't orchestrated for malicious intent, then yeah, it was just it was a 1 in a billion or 1 in a trillion opportunity. But at the same time, it also, the collapse had everything to do with poor investment management and poor. I mean, yeah, I would do this. I would. Odd Lots actually did a really, really, really good podcast yesterday If you guys, I've talked about odd lots before. They're one of Bloomberg's podcasts. If you listen to it yesterday, they actually had a banking regulator on the show, and they were going through all the evidence that they've kind of have been purview to, and spoke about exactly what happened. And it's a long shot of an opportunity, but yeah, when certain investors who hold a large portion of the deposits, they ultimately feel that they've lost confidence in the bank and they do a bank run. That's it. Your bank. Now, whether or not they did it because of, who knows, the CEO pissed them off. Maybe maybe there was some kind of altercation that led to it. But yeah, eventually that's what happened. And of course it didn't help that they were over margined, over leveraged. They made bad investment choices. And if you look at some of the, especially in the bond yields, they had long-term low interest gain bond yields that when they needed to free up liquidity to account for the withdrawals, they ended up taking like ridiculous losses on the positions they had. So, that's poor management and that's poor everything. So, hey, what's up, man? How's it going? Yeah. Yeah. So, just the only thing I could say is, if it interests you, definitely dive into what exactly happened. Like I said, Odd Lots did a really good podcast on it. It was about 45 minutes long, and they really detailed everything that happened. And it goes to now the economic sense of what happens next. Like I said, the Fed, and up until this weekend, FDIC offered insurance for up to $250,000, right? And apparently now FDIC does infinite. If you look at how it's broken down, it has the infinite symbol on it, because yeah, they're doing billions of dollars in insurance now. So there's a lot at stake. There's a lot going on, and I don't see an aggressive Fed funds rate hike at this point because of that, right? They've got to first shore up the banking industry before they could start tackling the inflation woes, right? So that's kind of my position on it. That's where I'm sitting with it. Yeah. So we'll see tomorrow morning. As of right now, current status quo for me is bullish dollar. And that's going to remain if the ECB comes in under a 50 basis point, that remains bullish dollar. If the ECB comes in with 50 basis points, then it's going to be momentarily bearish dollar until we figure out what the Fed's going to do. And that's kind of where I'm sitting with it. All right. The long answer is that. The short answer is I'm honestly just not being aggressive in trading right now. I'm sitting back and waiting for all this dust to settle and let the cards fall where they're going to lay, and I'll figure out my next play on it. But I'm not going to try to fight what's going on, especially with all the volatility. It's not going to be advantageous to my part. So tonight we do have Australian dollar labor numbers coming out, right? We have the unemployment rate. Realistically, I don't imagine that this is going to be off of forecast. I feel like they've got this down pretty good. I mean, they're only forecasting just under 50K worth of jobs, and they're calling the unemployment rate 3.6. So they're calling unemployment going down by 0.1% from last month. So if that comes in as forecasted, I mean, Australian dollar bearish for me. So I'm hoping we can get a momentary pullback to the upside so I can continue to look for shorts. But, nothing has changed. I've been talking about AU, NU, ACAD, and NCAD. And for those of you guys that trade Odd Chef and NChef, I mean, shorts, right? That's what I feel like for the last 2 years, I've just been shorting those. So nothing really changes with that. So the big thing for this week is going to be the ECB. And then obviously going into next week, I mean, I'll tell you right now, next week is going to be just massive, right? Just massive. Not only the FOMC, but you've got inflation numbers coming out of the Canadian and economic scene. Remember, Bank of Canada paused rates. They wanted to see what CPI data did. So I can imagine that if inflation increases, the Bank of Canada is going to have to step up to the plate and start raising some more rates. But the all eyes are going to be on what is going to happen out of the Fed. So next Wednesday, 2 p.m. is when we're going to get that, and then go from there. So fundamentally, I think all eyes should be really on the ECB and what the Fed are doing. And if you look at you look at anything, you look at indices, you look at metals, you look at, oil was a huge loser today. If you look at any sector, I think it's all being driven by what the US dollar and conversely what the ECB is going to be doing. I think moreover, the Fed is really controlling the global markets at this point, and everything's just kind of playing, little sister to what the Fed is doing, and then go from there. So, I'm going to maintain bullish dollar. At this point, there's no reason to suspect that it's not going to continue bullish, but only time's going to tell. And then obviously I'll have to make the decision on what my bias and what my next play is going to be once that data comes out. So jumping over to the charts, right? Let's get over here and take a look. All right, so we'll start with the dollar, and hold on, let me get this. Here we go. All right, so we'll start with the dollar, right? I talked about last week, I was kind of hoping that we would get down into like the 102, low 103 range. I really wanted us to come back in here. It doesn't look like we're going to get there. And, whatever, it is what it is. I kind of wanted a little more of a pullback, but, for me, this is enough for me to call a accumulation with a sign of strength, right? We've definitely, we've done it on two fronts. For me, this was a type 1 and a type 4 altogether. So, you've got 1 drive, 2 drive, 3 drive, there's your spring, and you broke out of your trading range there. And then of course, on the type 4, you're here, you exited the trading range. The only thing it hasn't done yet is it hasn't invalidated supply for me up here. And I was kind of looking to see what we were going to do when we got there. We did start to see a little bit of sell-off, but really this is not important as much, because if you jump over to euro's already, blasted through that point. This is that same area right here. So this is what I wanted to see. All right. And, looking back at what dollar index is really kind of driving towards, I'm going to be, mostly looking to see if we can get a pullback. And you can see my alert sitting right here. If we can get a pullback right back into the last 24 hours price action, I do want to try to start to take some buys to the upside on dollar, right? That's what I want to get out of this. And, obviously the way I'm going to be doing it is by shorting Euro USD. So on the Euro front, this is what I was looking at this morning right here. Hold on. There we go. So this is what I was looking at this morning. I wanted to see one of two things. We were hovering right here, and I wanted to see, can we get a pullback right back into the distribution, or do we break, confirming overall redistribution, and then we make our way up? So it does look like it is making its way up, which is fine. That's obviously what I want to see happen. There was a really small micro type 1 in the bottom of this. So I was pretty happy when I finally saw the little type 1 in there. But yeah, I'm just waiting for this bad boy to work its way up now. And as soon as we can get price, for me, my alert, and I'm going to move it just a little bit lower. my alert is going to be probably around the 107 area. There we go. Right around the 107 area. 107.12 would be 80% of the entire distribution. So anything in here is going to get me to start looking for shorts. And the, potentially with tomorrow morning, that's what's going to get us up here. That'll give me, tomorrow is going to be Thursday. So that'll give me Thursday, Friday, Monday, and Tuesday to at least try to work this as low as I can before FOMC, right? And I'm pretty, like, let's just say it comes into that 80 to make a new low. We're talking 196 pips. So, I mean, realistically, anything less than 19 pip stop loss is going to give me my 1 to 10. Now, I don't want to be in a 1 to 10 for 4 days. So, if I can get the tightest stop loss I can get, my targets are going to be to take out this low and then just continue working it lower until we can get some information from what the Fed is going to be doing, right? Overall, I do want to see if we do continue with the Fed's posture, it's not out of the question to potentially get a 11, almost 1200 pip move here. All right. So that's why I'm trying to position as much as I can to the upside. And, and then ultimately, if I can hold on for the ride, I'm going to do it. Okay. So yeah, EU at this point is extremely easy and clean to follow. Obviously it's going to get a little murky if we don't get what the expectation is out of the ECB and out of the Fed. All right. So I am most definitely going to continue to look for my shorts. I'm just hoping that we can get up above like the 107 level, which, at this point is about 128 pip move. Okay. So that's ultimately what I'm going to be looking for. And bear with me 1 second. Okay, perfect. All right, so that's EU. Hopefully everyone's got the same bias. If someone does have a different look at it, give me a shout. Let's take a look at it. Maybe it's something I'm not looking at. On the GU front, yeah, I mean, I'm bearish, right? I'm looking for the shorts on it. It did come in exactly where I wanted it to from last week. It actually misses my area that I wanted, I think by like 3 pips. So I was pretty good with where it's at. And then from a lower time frame point of view, this is what I was looking at this morning. Once we started to accumulate here, I was kind of hoping that we would get it up above here, specifically into London's price action. That's something that I've got on my point of interest, right? Not saying that this is a line in the sand, because if we don't respect London, I want us to sweep Asian and come up into this New York price action up here. Okay. But I don't want to start shorting it until one of two things happens, right? Until we get the pullback, or until this flipping thing turns into a redistro. So at this point, we've got our accumulation. If we do get some kind of shakeout, potentially maybe shaking this out here and then the break, well, now we've got a redistribution. So I won't worry about what's happening up here. And I'm just going to be playing mitigation of manipulation and then shorting it off. So that's ultimately what I'm going to be looking for. And then go from there. We'll see what what she does after that. Hold on 1 sec. Yeah, and then go from there. We'll see. Yesterday gave a type 1 during New York on GU. Mute my ring cameras. send what? Send the chart in the general chat now. Can you watch it? What do you mean? Did you send the chart? Hold on, give me a sec. Let me. I don't have Discord open, so hold on. So yesterday, New York session gave a type 1 on the 1 minute time frame for a distro at 1500. Oh yeah, bro. I don't trade that late in the day. You're talking about this right here. Yeah, I don't trade at that time. Yeah, I got you, bro. I got you. Yeah, hold on. Discord's taking its time opening up, so give me a second. You said in the general chat? Sure. What about the manipulation of yesterday at New York on GU? You talking about this? That? Yeah, what about it? Yeah, it was, I mean, this was the PPI data, man. But what about it? All right, hold on. General. I got you, bro. Hold on. All right. So on the 30-minute, you see this as a accumulation on euro. So hold on. On the 30-minute, well, let's go hour. Hold on. All right. So you're saying this as an accumulation and what, because of us being in here as a point of interest? Yeah, possibly. I mean, it could be the reason that we get up here, but the only thing about this price action, yeah. Wait, yes, by following structures. Yeah, but just have you looked, like when you look at dollar index? Hold on, let me invert it. You see a difference on dollar? I guess I should draw a straight line. Hold on. There you go. I have also for DXY this one. Yeah, I mean, I agree. Hold on. I mean, I'm hoping it's an accumulation that gets us up into the distro. I just don't see it happening. But I mean, if the Fed can work its way to get it up there, but this, I'll tell you right now, the Euro USD is being driven by far through what the dollar is doing, not what the euro is doing. It's loading. I got you, bro. Yeah. You're throwing in the general chat. Yeah, Euro futures already broke it too. I mean, on all the futures markets, it's already broken. I mean, I'm not saying it's not an accumulation. I'm not going to be buying the accumulation. So, like if this was, let's just say that this is Euro USD. In this case here, what am I looking to do? I'm looking to short out of the potential shakeout, right? And if it ends up clapping me out, then I'm going to be looking for either shorts out of here. That's why, like, I've got this alert up here, shorts out of here, or wait for this alert to go off to confirm redistribution. So at this point, we're in the down cycle of the market, right? I mean, I've got the Discord open. If you throw it here, hold on. What happens when I do this? The only thing when you put it in here, if you put the link in from instead of like cutting it out. If you just put the link from TradingView, I'll open it up. Otherwise, I've got to like download it and all that other stuff. Yeah, but this is for me, dollars driving it. So like this, let's see what you got, bro. Uh, so in a recession, does the dollar usually weaken? It depends on what side of the cycle of the recession you're in. Yeah, it's all dependent on the cycle. So right now, we are not in the labor recession. We are in the hyperinflation cycle. So we're going to see bullish dollar until the Fed gets off the gas pedal with interest rates, if that makes sense. So on a 1 hour chart on dollar, I guess what you're looking for bearishness on the 1 hour chart on dollar. You're looking for bearishness on the 1 hour chart on dollar. From the 13th of February, which is here. Because of this distro? Is that what you're saying? Yeah, I mean, I can tell you why I don't see this as weakness. I see this as buyer driven. So this is, hold on, do I have my drawing on here? Let's see. Yeah, there you go. I mean, this is why. So you've got supply supposedly was in control from here. That got taken out that. And look at how clean this accumulation is here. Extremely buyer driven, right? So, and then we reaccumulate here. This was key news. I think this was, what day of the week was this? This was Tuesday. So this was inflation numbers. So I was really hoping for us to come in here. You know, I was hoping, I mean, I agree. This is a distribution, but it's not a seller driven distribution. Just validate the distribution itself and look at who's controlling it. There's way less volume in the buy orders than the sell orders. I mean, and then look at the reactions you're getting on the buy side, you know, specifically in here and in here. So I agree, it is currently in distribution. My play is this is the shakeout and we reaccumulate. When we break this, we reaccumulate. So at this point, I guess the question, or for me, what gets me to continue to be bullish on this is we're bullish here. So we're only bearish. So after this break, we're only bearish here. So we're bearish in that right there in this distribution. But in the market cycle, we're not even in the down cycle of the market, right? Down cycle of the market came in, we accumulated, we reaccumulated, and then we broke, confirming the up cycle. So at this point, for me to be bearish on this, well, yeah, for me to be bearish on this, I would need to see at minimum this get taken out. And realistically, if that got taken out, so like if we broke here, could they still accumulate here? They could, but this is going to, that'd be such a momentum shift for me. Yeah. You got your three drives. What do you mean you got your three drives? In the distro? Yeah, I mean, I agree. This is a distro. Yeah, I agree. It's a distribution. I don't believe it's seller driven distribution. Yeah, I believe this distribution was just a reason for price to give itself a pullback in order to fill more buy orders. And it, I mean, just look at what's going on in like today's market cycle. I mean, this alone is extremely buyer driven. Yeah. Yeah. I mean, yeah, I don't see, like, if this was unorganized, I would say, okay, so sellers are in control, and maybe they were just trying to shake out weak-handed sellers out of this, right? But this was too well put together. And not only that, but fundamentally, follow the bond markets, even with the bond markets coming off of their highs, they're still, I mean, just look at, has anyone looked at banking stocks in the last 24 hours? Banking stocks have taken a toll. I mean, they're getting slaughtered, right? What are the two? Let me ask you guys this. What are the out of two tickers in the Forex market, what are the two tickers that has seen the largest appreciation? If you look at the high they took out, was equals. Which high? What time period? I mean, just in the last, whatever, 3 days or so. What are the two tickers that have seen the greatest price appreciation? Yeah, but on the Forex side. Yes. Gold and the dollar. Now JPY is in there. I don't know if you guys have looked. I'm not really paying attention too much to yen crosses, but today every yen cross was down significant. I mean, look at this. NJ is down 41 pips at this point right now. I mean, EJ was down 300 pips. What was I mean, look at this. You're seeing a tremendous. What was this? This was a 540 pip move on EJ. GJ had a very similar price. I mean, every now, the one thing that's got me confused beyond disbelief is that UJ also sold off. So how can every yen cross, right? If UJ is diametrically opposed to what the yen futures chart is showing, why did every single yen cross sell off in the last 24 hours? Every single one of them. So that's honestly why I'm not paying attention to any of these. But yeah, absolutely. The biggest tickers that saw price appreciation was the dollar index and gold, right? I mean, gold has seen a tremendous price appreciation, I would say. So since last Wednesday, I mean, this thing is up. I mean, look at that thing. That thing's up 1,200 pips. Yeah. I do think gold is going to take out this high right here. Um, right now, I mean, if you just look at, you know how I know the volume of physical gold is being purchased at record speed, because I've gotten two emails from my metals brokers that I purchased from, saying that their customer service times have been greatly delayed due to the influx of orders. So people are buying physical metals left and right. You know, um, yeah. No, no, we're not risk off by no means. Are we risk off? Are you talking about like risk off as far as equities? Yeah, I mean, there's absolutely, we've been risk off since October of 21, right? I mean, there is no there for me. I've been saying this for a while. There's no reason for, as an investment, to be looking to buy any kind of equities right now. Um, I tried to short oil this whole time and couldn't. Dude, oil flipping fell out. Where's WTI? I got an alert today. I got an alert today that oil finally broke. I mean, this is ridiculous how far this thing has just collapsed. Yeah, I mean, yeah, it is what it is. I haven't traded oil in a minute. All right, that's why you're thinking fundamentally it will sweep the high on gold. Yeah, 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 I do. I think at this point the market is on a seesaw, and every every time another key component of the banking system does something detrimental, you're going to see further fear and, disbelief on what's going on. So, um, 100K. So yeah, you know what it is? I don't broadcast this stuff, man. That's all. I mentioned in September to buy gold around March. This seasonality's been hitting hard lately. Have they? Yeah, but I guess the question is this: back in March, right? Wait, back in March or back in September? Gotcha. Back in September. Um, back in September. Where were we in September? So this is where I wanted us to come down to. I wanted us to come down to 1577. So it was close, right? It was close to where, but it just never got into. I mean, yeah, I mean, geez, this was my chart from back. I don't even know when. I probably marked this up. I don't know. I put this here back in March of 2021. I was hoping that we were going to get down here. So, but it didn't do that. But yeah, I'm pretty confident that if we continue, so let's think about this fundamentally. If we continue to battle inflation, and if central banks have to take a step back from that battle and ensure through confidence building their own individual banking systems, that fear coupled with just the continuation of shorts coming into the equities market, I mean, realistically, I wouldn't put it past us to be in the fall above this 2100 mark, and then potentially even higher than that. So we'll see. I'm just a little upset because my silver purchases, stupid yapping dog, man. Let's see. My silver, I was waiting for silver here. At least I thought it was. Here it is. I had all kinds of orders for physical silver in the $15 to $16 range, and we came to 1750. So I'm a little upset. I mean, we could still go, but I mean, just look how clean the accumulation is. The distro bringing it down into the slingshot that caused the break. I mean, I feel like we're just going to do this. So it is what it is. I'll just have to buy more silver at a more premium price. It just sucks. um, Off topic, thoughts on ICT's bank delivery algorithm theory? Dude, I'll be honest. I have no idea. I've never even looked it up. I don't even know what it is. Bank delivery algorithm theory. Yeah, man. I honestly don't know. What's your fib level settings? 80 and 50. Yeah, 80 and 50. Just would like to screenshot the settings. It's literally just an 80 and a 50, bro. That's all it is here. Uh, there we go. It's literally just a 80 and a 50. Yeah. All right. You don't think gold's on weekly up for a sell off? No, I mean, I don't. Hold on. Let's give it a look. Let's give it a look. I mean, okay. So in theory, right? In theory, this is what's maintaining the leg, right? So could this be a just long distribution in the making? I mean, I guess it could. The issue I have with it is this. They've come back into essentially the slingshot, right? And there's got to be a reason for gold to depreciate like that. And I don't see a reason for it, right? I mean, it comes from, if you look at the history of gold in here, right? The closest distributions, right? Like, let's just look at this one here. The closest distributions that we've seen, date range, here we go. The closest distributions, this bad boy took 441 days, right? This bad boy over here was, it finally broke there, 581 days, right? And then now we come over here and we're sitting at, I don't know, it's got to be over 1,000 days now, so gold typically, I know this accumulation here sat in here for over 2,000 days. I mean, could we see? Sure. I mean, we could. The thing with it, I guess the thing with gold is this: do I feel like this is short sellers shorting gold? And the answer is, I don't think so. Right. It's a commodity. It's a metal. So think of it, is there a decrease in the amount of people who are purchasing gold, right? I don't believe so. I mean, if you look at numbers, I mean, year over year, we're seeing more and more tonnage of gold being sold. So demand, right? Demand is up. And I mean, it's not like we have a limited supply of gold, but the supply is regulated by labor, right? Because it's not like you can just poof and make gold, right? It's got to be mined. So the one thing that, for me, from a commodity standpoint, just like anything else, right? POV, price over volume. And eventually, there is no competitor, right? I mean, gold is priced in a market. But eventually, as demand continues to supply the price points for gold, I mean, it's going to take a dramatic amount of demand falling off for us to see a depreciation, right? I mean, that's ultimately what it's going to come down to. Hold on. I agree. I want to see 2070 taken relatively high. Yeah. I mean, I do think we're gonna take it. What do I use for metals? So it depends, right? If you're talking about like trading it, I use FX Choice as my like indice and metals broker. And then occasionally I've traded gold futures on TD Ameritrade. Then theoretically, what would cause a depreciation in metals if there is such a high demand, assuming other commodities or assets look promising to yield higher gains? Well, I mean, I'll tell you right now, I'm personally more invested in silver than gold. Silver has a larger percentage yield to gain. Not only that, but like I just talked about, if you can have higher demand, you're going to have higher price appreciation, right? Silver is used in a whole lot more applications than gold. So, and silver is easier than gold to acquire. So, yeah, I mean, for me personally, I'm in on silver. Yeah. for a physical metal broker. I use, who is, hold on. I use, well, one of them is Ampex, right? I use them. They're out of New York. Yeah. Hold on. There we go. Bam. Come on. Yeah, these are who this is, and you can anywhere in the world you can get from them. And if they also have pretty decent prices, I personally have a safe, so I don't worry about it. But you can store there. They have a relatively cheap storage fees and stuff like that. But this is who I use right here. And it's crazy because I used to buy. I mean, I was buying these. So not only did I get silver buffaloes, but I also got before the Eagles were reminted. I bought those and I was buying them. Man, when I first started trading, I was buying them at like $15, $16 for one coin, and now they're 27. Same thing with like, I don't have any 1 ounce bars, but I do have a lot of the 10 ounce bars. So, but yeah, I have a lot of, yeah, it's cool. I mean, they've got, um, when, um, when Mandalorian came out, on Star Wars, they had a bunch of like Beskar silver, bars and stuff. So I bought all kinds of stuff like that, man. um, you got it, bro. Yeah, I mean, and the good thing is, I mean, as long as you have storage for it, right? Like I said, I mean, I've got an extra gun safe that I've got a nice little storage spot for them and stuff. But yeah, I mean, they're it's a good diversification, right? I mean, it's great to have, stocks, bonds, you know, it's good to have fun, mutual funds, but it's also great to have physical metals as well. Um, especially in this day and age when you never know when the next bank is going to fall, and you can still purchase things with gold and silver. So you can sell it back to them, absolutely, or I mean, you can sell it on the market. I mean, it holds its value, so you can go, you can go to any like a pawn shop, and it's whatever the spot price is, they're going to give it to you in weight. They don't care what's on it, as long as it's pure gold or pure silver. They're just gonna weigh it and give you a spot price on it. So yeah. Yep. All right, cool. um all right, so yeah, let's take a look. So the other ones I'm looking at as well, right, is AU and NU, and I'm just continuing to short the crap out of these, right? Um, the biggest thing I'm looking for, and hopefully we get a little bit of a pullback today with the labor report, right? What I'm kind of looking at. All right, so this is kind of what I'm looking at here. I was really hoping that we would get back up into this redistribution. I mean, realistically, yeah, we did get back up there, but not as deep as I wanted to. And at this point, like, what gets me into this is one of two things, right? So far, like, this redistribution that we got this morning out of inflation numbers hasn't done anything quite yet. So what I want to see happen is, I would like to see if we can do either one more push to the upside. And I was kind of hoping we were going to run these highs, because if you look at NU was in a really nice distribution. But what I'm hoping that we can do is either break the low here and confirm a new leg holding out of New York. And then all I'm going to do from there is, we have an accumulation with a distribution. So all I'm going to do there is just measure out my entire redistro, and hopefully, maybe this accumulation into this distro is what causes it, becomes my SC. This will be my very first point of interest that I'm going to be looking to short out of. Right. I'm not interested in trying to buy AU at all. And Yeah, I mean, I've been holding my bearishness on AU for a while. I mean, this thing has been pretty clean, selling off for a pretty good distance, right? Um, and ultimately, my next target on the long term is going to be to take out this low right here, right? I mean, we're looking at 6,600, and this is so it's about a 500 plus pip move to get to the downside, and that's kind of what I want to go with. So I do like the shorts on it. Obviously, we're at discount at this point. I mean, we have confirmed distribution. Could we go higher? We could. I just don't know if there's a reason to go, right? I mean, this is something that's going to play into what the RBA is going to be doing, and obviously what the US dollar is doing. Okay. So and then, of course, on the NU front, NU being a little different, right? NU being a little different. And I was really, really hoping that we were going to sweep out Asian liquidity. I was really, really hoping that, the news was going to sweep out and then we collapse. I could start shorting it. So at this point, we're smack dab in the middle. We're sitting in this redistribution right here. So what I would like to see is I'd like to see price either, work itself back up potentially into this New York and London move, or I need it to completely collapse. And then all I'm going to do is I'm going to measure out the entire redistro that it now becomes. So I'll do something like this, right? And if she ends up breaking and then coming back, then that's where I just sit here and wait for like a distribution here, unless she does something like this, right? And then this becomes my slingshot, then that'll be my first focal point. But until this break happens, I won't know what I'm going to be looking to play or mitigate out of. So it's going to be like that. Yeah. Did you wait from October till the January, February highs until you can short AU, or did you buy it up into the shorts? No, bro. I mean, I haven't taken a lot of AU positions, but I didn't buy I didn't buy anything on AU. So let's see, the last major sell that I got into was, I want to say, the last major sells that I got into were in here. And once we broke this, I was done looking for shorts until we came back up. And then after that, it was playing in, let's see. Yeah. After that, once we broke, that was it. I was kind of done waiting until we confirmed the down cycle. So all of this is the up cycle. There was nothing for me to play. And it wasn't until we broke that low that I finally confirmed. Yeah. Do you feel like you missed out on longs? Nope, I don't. No, man. Yeah, because you know what I was doing in all of these buy ups here. I was trading something else that was with the current bias. So yeah, I mean, yeah, no worries. Hold on. Did I find a block? No. Oh, I did find a block. Awesome. All right. I meant for fib settings in style, it doesn't matter where exactly you put in fib settings in style. What do you mean in style, bro? In style. What are you talking about? Yeah, whatever you want, man. I mean, no, it doesn't. Yeah, if I wanted to, instead of this being the 50, bro, and I wanted to make it over here, yeah, I can make it over here, bro. Yeah, it doesn't have to be. It could be whatever you want, man. Yeah. All right. Um, Yeah. So at this point on NU, and Australian news is going to have some influence on it, right? So on this point on NU, we're either gonna go and break here, and then I'm going to play out of this, or I want to come back up in here and then start shorting it. So that's going to be my game plan with NU. On UCAD, so UCAD, I've been bullish on UCAD, right? Canadian dollar is extremely bearish, so bullish UCAD all day long. And yeah, this thing just doesn't want to give pullbacks, man. I mean, just look at this. This damn thing just does not want to give pullbacks at all. So I feel like I've been waiting forever on this, and I have been. I mean, there's nothing I can do about it. You can see what I was looking at this morning. I'm either waiting for us to take out this high and confirm reaccumulation, or I want the distro to drive one more down into like this area here where I can start looking for an accumulation to take it up. So, I mean, that's kind of where I'm at with it. Yeah. UCAD, I think for me, UCAD, the chart is easy. The entry is not so much, man. It's not giving me enough of a pullback to warrant wanting to throw money at it and trade it and time and all that stuff. So it is irritating me a little bit that it's not giving me those pullbacks, but it is what it is. But UCAD, for me, it's pretty simple on what I want to do with it. I just want to continue, as long as the Canadian dollar just continues to be bearish, I'm just going to continue to buy this up. So, I'll stay with that. And then of course, ACAD and NCAD. Yeah, I mean, I'm selling the crap out of them. So I was really upset that it did exactly what I wanted it to. So at this point, we're still here, right? We're still here. Here's the redistribution, right? Being maintained from here. We did come in and we've accumulated, right? You can see we're just bullish order flow. We finally did break that order flow, which is what I was happy with. We finally did break. And then I was looking at this morning. When the hell was I looking at this? Hold on. All right. So I was looking, where's ACAD? Oh, here's ACAD. Yeah. So this morning, I was really hoping that we would sweep out these equal highs, and I wanted to play into this. So I wanted a distribution up here, and then obviously I was shorting it. That's what I wanted this morning. And this stupid thing did exactly that, but gave zero entry. And then I was trying to catch the redistributions. She gave a bunch of redistributions. She did come in. She did come in and sweep, right? She swept it here. As soon as we broke, I was ready to start shorting. And all I did was just measure the entire move. I had an entry off the 80, which was like up here, just misses it. And then from there, it was okay. So we had redistribution here. I was playing out of this. No, we don't come up. And then finally we broke here, and I kept trying to catch something on it. But after we got into about, like 1-2 p.m. my time, I'm done trading. And then, from there I was like, okay, we still potentially could come right back into here. So the area that I'm kind of expecting us to come back into, and we potentially can get it today with news, is going to be this right here. So yeah, there we go. So I'd like to see us come in somewhere between like the 9136 to 9156 areas, somewhere in here. Specifically, this New York candle is what I want. That's ideally what I'd like to play into. And, if we can get up here today, which isn't far, I mean, we're talking like 30, 40 pips. Then ideally what I'm going to be waiting for is maybe a play at Frankfurt, something like that. Right. That's what I'm going to be looking for. So that's ACAD. I'm just looking for shorts, want to take it lower. And then same thing on NCAD, right? So NCAD, we had the distribution this morning that I wanted. We were in the right area, but man, she just did not want to give diddly squat, man. She didn't want to give anything. So I'm not 100% committed to a play on NCAD right now. It's for me, this is still early. I was kind of hoping that New York was going to give me my UTAD, and then I could start shorting it right down, but there's no manipulation anywhere here. So for NCAD, especially with the spread that it's giving, unless it's going to be a clean entry, I'm just going to sit back on it. I'm not going to do much. But I am not, I mean, I know I'm not looking for buys. It's only shorts. So, ACAT is where I'm going to be looking. I'm not doing anything with UJ. That's actually going back over to the secondary list. And then EG, I don't know. Did anybody catch the EG play during London today? I mean, it was a pretty clean play. Just playing continuation moves to the downside. And more importantly, we've confirmed the distribution, right? We've broken, confirmed the distribution, right? I have a distribution. So I like where it's at. I mean, it was a pretty clean. Yeah, man. Have a good one, bro. It was a pretty clean distribution here. Your typical distribution during Asian, and lo and behold, you get your nice manipulation during London. I mean, just to the low to confirm was a 1-8, which was pretty decent. And then the break to confirm the overall distribution was a 1-11.5. So pretty clean, distribution that occurred, just shorting this sucker off. So, I mean, that's ultimately, yeah, I personally didn't take the entry. I just back tested it. Yeah, I was not up at, what time did this come in? This came in at 4:57 my time in the morning. So, but there was a couple of people that did snag it. So I wanted to back test it and see, one, if it was worth it, especially off of a split risk, because I would have put a sell stop, and then I would have put an entry off the 50 of the sell limit. So I would have had split risk on it. Yeah. So that's EG. And then of course, EG. Yeah. Any pullbacks, I'm looking for shorts. We've confirmed distribution on this thing. So I'm going to be looking for continuation plays to the downside. And obviously for me, we could, this is my cause of the break, right? So any kind of pullbacks to there is what's going to get me there. So yeah, that's kind of my game plan with it on currency side. And then, yeah, on the indices, I mean, shorts, man. I'm not looking for any buys on this thing. I am just looking shorts. So you can kind of see, let's see, there was some really good plays last week. I mean, I caught US 30 and I caught NASDAQ sells last week. Really clean price action over the last, I would say 2 weeks. There's been some decent moves on it, right? I mean, the one entry here was a 1-9.6, the first target. And if you held into this morning's low, it's at a 1-42. So really clean price action. There's actually 2 entries in there. So hold on. And it's a 1-42, and the other one's a 1-72 out of this price action here. But you can kind of see my game plan here. I was kind of hoping that we would, accumulate here and get back up into this, but man, are we struggling with indices. I just don't see a reason for this to go up. I at least want us to manipulate, and then I can start shorting it. We don't necessarily need it to get into a point of interest. But yeah, U30 last week was a decent play, and so was Nasdaq's. Nasdaq gave a similar entry. Come on. Yeah, there we go. So my Nasdaq entry was up here, and that to the low gave a 1 to 62. So on the first entry, and the second one was a 1 to 49. So yeah, it was pretty clean. So, and you can kind of see, it sucks where we're at right now. This morning I saw where we came into. I was hoping that we can kind of work this up, which it's doing. And what I'd like to see now tonight is the old Frankfurt sweep. And if that happens, shorting it to target this low. All right. That's what I'm going to be kind of playing with. I do like how we're moving on it. So if I wake up this morning and we're in here and Frankfurt gives me that sweep, I'll be looking to short it. And then going into equities open tomorrow, looking for the same. And then SPX, yeah, SPX, same thing. I mean, Nasdaq's obviously got a little more bullishness in it just because of some of the most recent tech news that's been coming out. But on the indices side, I mean, banking, everything, energy, banking, what is it, like the retail sector. I mean, everything is just dragging down indices. So we're, ultimately you can see what's going on here. I'm hoping we can get a sweep above here. I think it's unrealistic to think that we're going to come back up to this, but if it happens, it happens. So am I still trading for TFT? Yeah. I still have my TFT account, bro. If so, what's your thoughts on how it compares to TPT? So, man, I'll tell you this. I guess you've got to look at it from what's more important to you. The biggest things, hold on one second. One second. Let's see. Okay. Okay, cool. So TPT, I never had an issue with the actual servers, but I did have an issue getting filled, right? Their spreads went to crap later on. On TFT, their spreads are great. A cap spreads are freaking small as crap, but I can't tell you how many times their server is down. Like I went to go take a trade on US 30 and their server was down. So when it comes to like server issues, I mean, a cap is a horrible broker. I think people love it, but they've got great spreads, but they're unreliable. As far as like TFT's like background office and all that other stuff, yeah, man, TPT was right there as well. I mean, they had great customer service, and there was no issues. They were a very professionally driven prop firm. So, I mean, that's what I would say to it. Yeah. But other than that, yeah. Anybody else have any other questions? I've got to run in like 5 minutes. So I got through everything I was looking at. So I mean, it's dollar driven, dollar's still like leading the way for me. Is there slippage on TFT? Yeah, I mean, there's slippage with ACAP. So yeah, I mean, you just gotta, so like I don't trade during news, so I don't get a lot of the really crazy slippage. But there's definitely slippage. I'll tell you right now, you hold over on a changeover period, like when New York closes and Sydney comes online, or over a weekend, You better be in some good profits. Otherwise, you're getting some really phantom ghost candle coming in and taking you out. How to deal with slippage during Asian Open? What do you mean? How do you deal with it? Yeah. What session is Frankfurt? What do you mean? What session is Frankfurt? Frankfurt markets open an hour before the London market does. Is there any way to avoid it other than closing the position? Nope. Or that, or get a broker that doesn't give you crazy manipulation. So regulated brokers aren't going to give you that. But if you're on an unregulated broker, yeah, they can do whatever the hell they want. On indices, do you trade at London? Yeah, if it's there, if there's I typically will only, I would say like 90% of the time I'll trade just New York market. But on a Thursday or Friday, I'm up for London. So if there's a position, I'll do it. But it's only, I'm only going to trade it in that like hour to like 90 minutes after London Open. I won't trade it after that. I'll just wait for New York market. Um, ACAP does have, yeah, ACAP is an unregulated broker, man. They'll do whatever the hell they want, man. Yeah. Do you watch SPX before you work out? A US 30 entry? Yeah, I look at all three of them, bro. I'll have all three up. NAS, US 30, and SPX. And I'll have more than one feed. I mean, you see, like you've seen my my watch list. So I'll look at all the feeds, and obviously I'll look at futures first, right? But yeah, I'll look at all the feeds because some brokers might give you a crappy feed. You might think you have a break of structure, but in reality you don't. So yeah, cool. Yeah. Anybody else have any other questions? Cool, cool, cool. Awesome, guys. Well, listen, I've got to run. I got to go pick up my daughter. But yeah, I will definitely be on the charts tomorrow morning, and I'll definitely be listening in on the ECB and what happens. And obviously, like I said, if my bias needs to change depending on what the ECB does, I'm going to adjust to it. So, it's definitely important to understand like the fundamentals, what's going on from the economy side, because and like I said, if they come in under 50 basis points, bullish dollar, bullish dollar, bullish dollar. So cool. Awesome. Thank you guys for hopping on, and I will catch everybody later. Have a good one.